Hi, so let's continue the deep dive company analysis of Markel. In part 1, I went through how I firstly research a company and where I find the information. I also started working through my investing checklist. I covered the industry related questions, and in part 2, I went through the competitive analysis or moat questions and looked at the historical growth and performance of the company. Now today, we move on to the management analysis. For those of you who are new, watching these videos in order is probably a good idea. But look, if you feel like starting here, then that's cool. I think this is probably the most interesting part anyway. The checklist that I'm working through is something that is evolving and will continue to evolve throughout my career. I base a lot of my knowledge on the great investors. We're talking Peter Lynch, Warren Buffett, Charlie Munger, Monish Pabrai, Phil Town, and a handful of others. The company that I've been examining in detail is Markel, which has been described as a mini Berkshire Hathaway. Okay, so this is the third section of my checklist. These are the questions I want to answer to make sure I actually do understand what I'm researching. If I can answer these questions confidently, then I can move on to the final part of the checklist. Okay, so my management related questions are these. Return on tangible equity, and I want this above a 15% and growing. And I look at how that performed over 15 years because I want to see how it performed during the GFC too. The next thing I ask myself is, I look at the return on invested capital, and I want that above 15% as well and consistent over a 5-year period. I look at how they performed over 15 years as well because again, I want to see how they performed in the GFC. The third thing I look at is whether it pays a dividend or not. And the fourth thing is I look at the debt to equity, and I want that under a 0.7. The 0.7 number just means they're good at looking after their debt. Then I look at the current ratio and I want that over a 1.5, well, definitely over a 1 anyway. Then I look at the cash in the bank and I want to make sure that the debt can be paid off quickly if needed. And then I also look at whether the cash in the bank is growing. The eighth question I ask myself is, are the current assets strong enough to get through tough times? So what I'm looking at here is the other current assets bigger than the average expenses. Then I go look at the free cash flow. I want to see it growing or at least stable. Okay, now the next few questions are definitely subjective. So the first one is, how honest does the CEO sound in the last 3 annual reports? Look, this is just a feeling. The next question I ask myself is, how salesy does the CEO sound in his interviews? Again, just a feeling. The 12th question is, does the CEO sound defensive in difficult times? The 13th question is, I read the CEO's background and I try to work out how smart they are. So after I've learned a little bit about the CEO, I want to know how invested the CEO is in the company. Then I want to see their shares are more than their salary. Then I go look at the institutional ownership, and look, the lower the better here. The 17th question is, are there rumors and current issues with the company that maybe are temporary? The 18th question is, are insiders buying? Look, selling is not as important, but buying, well, it's really important because the only reason anyone is buying anything is they think it's a good investment. There are multiple reasons why someone could sell something. Maybe they want to buy a house, maybe they want to put their kids through college, who knows? But buying really just means it's a good investment. And the last question I look at is the company buying back shares. Now, we don't have to say yes to everything on this list. That's probably going to be impossible. These are just the questions I'm asking myself to see how well I know the company and to look for red flags. Now, I found all of this information for Markel by watching YouTube videos from Tom Gayner, the CEO, speak at events and shareholder meetings, and by reading through reports put together by smart investment funds. You can find pretty much everything you need by just Googling. Okay, now I'm going to attempt to answer as many of the questions on my checklist as I can for Markel. Okay, so back to the first question, we'll look at return on tangible equity. Now, this would be important for most companies as this and the ROIC, which is the next question, show the company's ability to compound. But in investing related businesses like this one, well, it doesn't really work. We want to look at the growth in book value instead. Don't skip this one for most companies. It's really important. So the second question, when I want to see the return on invested capital, well, look, again, this also doesn't really apply to insurance companies. This is one of the most important metrics for all the other industries. So please, again, don't skip it. But for insurance and financial companies, we really want that growth in book value is what we got to look at. So let's move on to the third question, and I'm looking at whether it pays a dividend. And the answer is no. Now, I listened to Tom Gayner explain the priorities in which their company allocates free cash flow. The first way they allocate this free cash flow is they reinvest into the companies they own if there are good opportunities. Now, after this, they invest in the stock market into great investment opportunities, just like other guru investors. Then their third priority is they do share buybacks if their share price represents good value. And the last option is dividends. They haven't paid a dividend yet. And as dividends are the lowest of their priorities, look, in my eyes, this is great management because it shows a good understanding of what shareholders really want. and that is a more valuable investment. Dividends, like I have explained in my dividends are bad investing strategy video, that dividends should be the last resort for a company that doesn't have anything else to do with their money. Okay, now we go look at the debt metrics. So the debt to equity, we want under a 0.7. And yes, it's the debt to equity ratios have been actually about 0.3 now for decades. Now, normally I'd go look at the current ratio and we want that over a 1.5, but this actually doesn't apply to insurance companies, so we just move on. So now we go look at the cash in the bank and see whether the debt can be paid off quickly. And for Markel, well, the cash in the bank is more than the long-term debt, and that's perfect. Now, while we're looking at the cash in the bank, we want to see it growing. And as you can see, yes, the cash pile is getting bigger. Now, I wish this was even bigger again, as I would like Markel to be ready for when a crisis in the market happens. Tom Gayner, the CEO, can also begin investing when the market falls. Look, I hope they spend the next 12 months getting ready and keeping cash and cash equivalents. I see the last few quarters this has been happening, moving from about that $2.5 billion mark to $5 billion, and that's only in the past 12 months. Look, I hope they keep doing this. $5 billion is good, but look, I just wish they had more. $5 billion in relationship to their $40 billion in assets, look, it could be better. Look, I hope they can get to say 10 billion. That would be a lot stronger. Okay, so the next question is we're just looking at the current assets and we want them larger than the average expenses. So based on this cash pile and the operating expenses that Markel has, I think they have about a 9 to 12 months worth of a runway if something dramatic was to happen, like what happened in the first quarter of 2020. This is not as good as I would like. Like I said, I would prefer $10 billion in cash. After this, they would need to start selling some assets that, look, just might be a terrible thing to do, especially if the market is really depressed. Again, I'd prefer a bigger cash pile. It's fine for 9 to 12 months, but bigger is better. Now we move on to the free cash flow. And as you can see, great free cash flow trend here for Markel. This is what is important for us as investors. If the company can use this free cash flow and make even more free cash flow, as you can see from 2005 to 2015, they have been a compounding beast. So looking at the book value per share growing, this is actually where the free cash flow goes, into more investments and assets to grow the business more and more year on year. This is a sign of great management. Okay, I know these next few questions are subjective, but it helps me think whether I'm getting persuaded by a persuasive CEO. Look, a smooth talking positive CEO might actually suck me in, and I just want to stop and actually think about what he or she is saying. Now for Tom Gayner at Markel, well, honestly, it's a bit repetitive. They say more or less the same thing each year, which is boring, but shows that the rate of change in the industry is actually pretty slow. That's actually maybe a good thing for us long-term investors anyway. Okay, how salesy does the CEO sound in interviews? So, well, look, so far I'm happy with listening to the management team, except I do get a little annoyed how Tom Gayner, the CEO, retells the same analogies in his interviews. Just feels a bit rehearsed. I know he does look up to Warren Buffett and Charlie Munger a lot and constantly says that they are smarter than him and he is just following their lead. So look, that is a humble thing to keep saying, which I do like. He just says it all the time.
In 1984, that's when I read an article in Fortune magazine about Berkshire Hathaway and about Buffett. And just to tell you how stupid and naive I was at the time and just trying to shake it off as best I can, I remember reading that article and thinking to myself, wow, every word just dripped common sense. So I went into the guy I was working for at the time, different guy than my partner, but I said, hey Joe, have you ever heard of this guy, Warren Buffett? And he said, it's Buffett, you idiot, and threw me out of his office and whatnot, and I saw Berkshire Hathaway, and I was so stupid that when I looked at the price, and it was $380 a share or something like that, I said, no stock could possibly be worth that kind of money, so I didn't buy it, to my everlasting regret.
Okay, the next question is, does the CEO sound defensive in difficult times? And actually, a little yes. They are having to defend themselves, saying that they are on the right path and long-term investing requires a long-term mindset. Even though they are a bit defensive sometimes, I completely agree with this long-term mindset. Okay, now I look at the CEO's background and try to work out how smart they are. Now, Tom Gayner has actually worked for the company since 1990, and that is a long time. He constantly references Warren Buffett and Charlie Munger. These guys are the greatest teachers in the investing world, so I'm very happy that Tom Gayner is a big supporter and a follower. That's all the background and education I think I need to know. So now I want to see how invested Tom Gayner, the CEO, is in the company. The last reports I read that Tom Gayner has actually 2/3 of his net worth in Markel stock. That is perfect. We want a CEO who is tied to the performance of the share price. He is an owner just like everyone else. So now I check to make sure that the shares of the CEO are more than their salary. And in Tom Gayner's case, he has actually 10 times more value in his stock than his salary. Look, that's great. He has the same incentives as you and me. Now we look at the institutional ownership, and the lower the better. Now for Markel, it's 78% institutional ownership. Well, that is high. Peter Lynch suggests that if this is low, there is more volatility generally, so there is more opportunity for mispricing. I think this is just a bonus if this percentage was low. It's not a deal breaker at all. Now in my research, I wanted to see if I could uncover any rumors or current issues with the company. Maybe these are just temporary things. And look, for Markel, there are no current rumors or issues. The reason we look for this is it can lead to temporary mispricing. But at the moment, Markel just doesn't have any issues, so that's fine. Let's just move on. The 18th question is, are insiders buying? Well, like I said before, selling is not as important. And there's actually no recent action here, so let's move on. Now, the 19th question is whether the company is buying back shares. They have the option to buy back shares, but they haven't actually exercised this in the last few quarters. Obviously, management have decided that the stock price isn't a massive bargain. As we saw earlier, it looks like they have just been keeping the free cash flow in the cash in the bank. Here on the buybacks chart, they were buying small amounts for the last 3 years, but nothing dramatic. I'm overall very impressed with the management at Markel. I really like how they distribute their free cash flow and that dividends are the last priority. I love how they are a compounding beast as well. I also think the CEO having 2/3 of his net wealth tied to the performance of the company is a great sign. When I listen to Tom Gayner speak, he really loves Warren Buffett and Charlie Munger, and it is obvious that he is following the roadmap laid out for him. So I have studied the company and answered all the questions so far in my checklist. I've looked at the industry, the competition, the growth, the debt, and the management. Now what I want to do is write my thesis for investing in this company. I'm only going to write the thesis because I think this is a great company and something I'm very interested in actually investing in. If I thought there were just too many red flags while going through this checklist, I actually wouldn't bother writing a thesis. I also want to value the company and see what price I'm willing to pay. I hope you follow along with me as we finish analyzing this company together. I would actually really love to hear more points that I could add to my checklist, and maybe you have your own checklist. I highly recommend having one if you don't have one yet. It will help you feel so confident in your investments and will help you make good decisions. And something we can all improve is our decision making. Now don't forget to subscribe so you don't miss my future videos, and I will see you soon for Deep Dive Part 4, the thesis and valuation.